There's another stock in news, and that is Jindal Steel. Yesterday, remember, the stock did come under significant pressure. News was, however, that they have won a 665 crore rupee order from Rail Vikas Nigam Limited. So we've brought on board Mr. Naushad Ansari to talk about the order. Mr. Ansari, good morning. Thank you for joining in on ET. Now, let's start off with congratulating you on this order win worth 665 crores. Tell us about the delivery schedule and also your own long rail capacity utilization. How does it stand at now with this order?
The rail is really a very important business today for us. We need to understand that within a very short period of time, in less than 1 year, we have already got 2 prestigious orders from Indian Railway and their associates, and we are very, very thankful to Indian Railway as well as to RVNL for considering us as their partner. As you are aware, the first rail order has already been completed in time, in fact 4 months ahead of schedule, and they had already given us 30% additional order, which is already being supplied. And this RVNL order, we are absolutely confident that we will be able to supply this well within time. And this order is obviously very important to us because let's say going forward, we do expect that in a year we should be able to supply at least 500,000 ton of rail to Indian Railways and their associate, which is almost as good as 10% of our business. So we are doing everything which is possible to nurture this business, to develop this business as much as possible by supplying the right quality, by supplying everything in time, by making sure that our customers are well satisfied with our product. So that's the way that I'll put it. The rail order is very important to us.
Can you give us a perspective on where your order book stands now after winning this particular order, and also what sort of revenue visibility does it lend to you?
So this if you look at the RVNL tender, it was more than 4 lakh tons of requirement, I think close to about 4.5 lakhs tons of requirement. So far this order is close to about 1 lakh tons. So therefore there is a potential for us to get additional order out of that because the demand is very much there, and same thing is also true for Indian Railways. So the important thing is that we are getting these orders, and I'm absolutely sure that by the time we finish these orders or complete it, or much before, even before that, we should be getting additional orders because the demand is very much there. And I think the railway also has developed much more confidence on us. They have seen our capability. They understand that we can deliver both in terms of quality as well as in time. So we are, as I said, I'm very thankful to them for this consideration, and we will do our part, and we'll make sure that we fulfill our part of bargain. Now, to also give you a sense of how important these orders are, so let us say in this mill, if we make about 500,000 tons of rail, and that's possible for us to do, so this 500,000 ton of rail will be almost close to about 10% of our business. So it becomes quite substantial, So therefore, this is certainly one focus area for us. We are working on improving our productivity. We are wanting to make sure that the rails generally have higher level of rejections compared to structures, but we are now focusing on reducing that rejection and really improve this entire acceptability. So I think there is a lot of work which is required to be done by us, and at the same time we see a very bright future as far as rail business is concerned.
Mr. Ansari, I've just done a very rough back of the envelope calculation, and this order, the 665 crore order, puts your average per ton pricing at approximately 74,600 rupees. I think this definitely indicates much higher margins versus even your other long products, is it not?
So, if you look at the EBITDA per ton for rail, it is as good as any other product which is there. So the original order which was there for the Indian Railways, there of course we had just gone for an entry price where the margins were relatively lower, but important thing was to get that entry, and that is how it was. Today the prices are much better compared to what it was for the original Indian Railway order, and this certainly should be able to fetch us the EBITDA in the range which you mentioned, that we should be having EBITDA in that range, and that is what our aim is. to make sure that this EBITDA is as good as the other products which we are supplying to this. An important thing is that these are large orders. It keeps the mill volume going, and therefore if the EBITDA is also at the same level, it certainly helps us in our business substantially.
But overall, things do seem to be picking up after a slow volume growth between 2015 and 2018. With the resumption of the 1.8 million ton DRI plant as well, will the strong volume growth streak continue in FY20 as well?
So, we are in the process of ramping up. Angul is also ramping up quite well. And Raigad, of course, has been a steady performer. We are hoping to push it a little bit more. We are already operating in high 90s in Raigad percentage-wise, capacity utilization-wise. So we are really trying to push maybe a couple of percentage point more. Where as far as Angul is concerned, we still have a substantial volume ramp-up which is required to be done. So for 2020, we have already said that officially we have said that we will be doing somewhere around 6.5 million ton. We are actually hoping to do more than that, and that's something which is certainly feasible, because even in the month of March our exit rate was close to about 6 million ton. So going from 6 to 6.5 or even to 7 should not be really much of a problem. So our expectation is that in 2020 the volume ramp up will be substantially higher, and the overall volume will be much higher compared to 2019.
Okay, now Trump has hiked tariffs on China. China is of course imposing retaliatory tariffs. So we know international steel prices may dip because of this entire rhetoric, but are we going to see a substantial impact on domestic steel prices?
So if you look at I think that the prices which were lowest recently was in the month of December. Later part of December and even in the first week of January, the prices were very low. The prices actually have improved substantially compared to that in the month of later part of January, February, even in the month of March. These prices were much better. Now recently there is obviously an issue of liquidity, and that liquidity, the cash availability in the market is less, maybe for various reasons. We all understand the reasons why it is less. So if the liquidity is less, then normally the prices, then it gives a feeling that the prices are actually coming down. The fact is that the basic demand within the country is quite healthy. So I am sure that as soon as this liquidity issue is sorted out, which should happen soon after May, we really expect things to change substantially in the month of June. So once that happens, then I think you will find that the prices are by and large remaining steady, and we should not have any difficulty at all in selling the products. In fact, today also we have order books are reasonable. We are able to sell all the products that we are able to produce. So therefore, despite that liquidity issue, we are able to get to the kind of numbers that we have been talking about. So therefore EBITDA levels by and large we expect to be maintained in this quarter too.
Thank you so much for coming on board and giving us details about your growth outlook and your order book and the revenue visibility that it comes with.